Our guest has a pretty striking analogy for anybody trying to assess the state of the housing market this year with this tariff threat hanging over the economy. Let's get more from Robert Hogue. He is Assistant Chief Economist at the Royal Bank of Canada. Robert, it's great to see you. So you say that trying to produce an outlook for Canada's housing market like this right now is like putting a price on a home before an earthquake, because these tariffs could have such a drastic effect?
Right, and we don't know exactly what the outcome will be and the impact on ultimately will be, but certainly this is obviously a major factor that's out there that could seriously disrupt the housing market. But, you know, it's not a certainty either. And so at this stage, it is really into a wait and see as far as what will ultimately happen and of course, what the economic impacts will be, including on the housing market.
So apart from the possible economic downturn that we could get, also, I suppose the cost of materials could rise if they're brought in from the USA.
Right, and in the supply chain, disruption could be a huge, major issue on the housing construction. But when we take a step back and look at, well, if it weren't for those major uncertainties, it's a housing market in Canada that's in a recovery mode, and with lower interest rate, we expect that to continue. So kind of the undertone should be relatively positive, with more activity and now more inventory that's in the market, so that buyers have more options to choose from. But it also makes it for a more balanced market. So even though it's in recovery mode, prices, in our view, will maybe rise, but very slightly so, and potentially decline in some market segments, like in the Toronto condo market, for example. So, you know, fair enough. There's a lot of uncertainty, but aside from that, it looks like the market should be in recovery mode at this point and going forward in 2025.
And fundamentally, home buyers just have more ammo, don't they, with these lower interest rates? Right,
and then lower interest rates, really open the door. There's a lot of pent-up demand that's out there. We know over the last couple of years that the spike in interest rates and the sharp loss of affordability has pushed a lot of potential home buyers on the sideline. And so lower interest rate opens that door, not completely open, but at least to a certain extent. So if it weren't for that uncertainty that may keep some buyers very cautious, it does open the door for more activity to take place and more sellers to come in the market. And the latest numbers that we've seen, for example, in January, highlight the fact that it looks like sellers are willing to put the properties on the market, at least in the Toronto and Vancouver and Calgary and Montreal market. So it looks like they feel a bit more comfortable as far as listing their properties in the market.
We have so much money tied up in housing in this country, so much of our economy devoted to it. Do you think the government should be trying to discourage home ownership and just get people to rent? Because we've got these policies that are designed to incentivize buying your house, or is it just too culturally ingrained to combat that?
Right, but I mean, I get the point. It's something that economists have been saying for years, is that if we keep kind of stimulating demand, even though it's well intended to help, for example, first-time home buyers, ultimately, if the supply is not there, what you end up doing is inflating prices because demand is stronger than the supply. I'm not quite sure there would be many politicians out there that would be willing to incentivize home ownership, but I think really your point is more about keeping the focus on the supply side, making sure that the supply can be more nimble, more adjust more quickly to when the demand rises, and also just honing in on the fact that there's still a supply shortage out there. And if we kind of zoom out a little bit from the current situation, looking at how demand had grown in recent years, that was unmet by this lack of supply. So let's keep on the focus on growing the supply side. And the recent measures to reduce immigration, for example, should cool down a bit on the from a demographic perspective, at least the demand. So it should allow some kind of an opportunity to, over the next little while, to kind of rebalance markets.
Just looking at Alberta, whose province has grown so fast in recent years, you do see a rise in resales, and home prices, you reckon, will go up about 4% this year.
Right, and it's sort of all amazing. And that's probably, when you look at our projections for the coming year, it's sort of at the high end of our price forecast. And markets in Ontario, in our view, will be less than 1%, and the same in BC, for example. So, and this is in large part, like in the case of Alberta, reflecting the fairly kind of a strong momentum that we've seen over the last, especially over the last year. That is likely to continue, and in markets in Quebec as well, there's quite a bit of momentum as we speak, and that's keeping prices a little bit firmer than in other parts. But going forward, I think this is also speak to the very diverse set of circumstances across Canada, where you're going to see more than likely some variances in the home price gains, as far as, and also in terms of demand supply conditions being tighter in some parts of the country relative to others.
And just to, we can't cover the whole country, but Ontario, we have heard dire reports about investors in condos underwater, certainly not covering the cost of servicing their debt. Is there a risk of a major slump in condo prices in Toronto, do you think?
It is already in the slump in terms of activity. We're starting to see some downward pressure as well. I mean, there are, as you point out in the media, some certain horror stories that are out there that we shouldn't be overly surprised, given how crazy the market was just as recently as 2.5 or 3 years ago. And I'm also concerned about down the road in 2027, 2028, when all those pre-construction sales that are not happening today will eventually hit the market on the supply side, or tempering the supply in a few years down the road. So that's something to consider as well.